Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good evening, everyone. Ira Epstein of Linn & Associates with your financial market update for late today, and I am on Thursday, the 9th of March, 2017. Now, I have been prepping you that when you lose an embedded slow stochastic reading, which has to do with the momentum index, where price leads momentum, and that's one of the oscillators I use, that often, forget the word always, often, price and the 18-day average of closes come together when the market loses a bullish momentum reading. And I'm going to show that to you. These indices have now done that. So let's take a look and see just what I mean. If we look at the weekly chart of the Dow, the market is for the week down 102 points. Remember, we're already trading for Friday, so this is all built into it. You can see how the market went up rather dramatically, about quite a few points, 700 and some odd points there, and just turned, actually, what is that? 400 points there, and got itself a basic small correction. What else do you see on this chart that I think you should pay attention to? Do you notice that from this point here, and I'm talking right after the first year, we had one break. You don't have after that a week where you're having lower lows. Keep your eye on that. That might be the first chink in the armor when it happens. It hasn't happened yet, and this chart is still looking good, even though you can get a period with an inside week. Show me where you've had a lower low on that. That's pretty important. I mean, 2 months or so running, that's very nice. When we take a look at the closes, we've gone from 19,694 to 21,091, and on this correction, we're back to 20,879. So we're getting a bit of a correction in the market. You know what that correction amounts to, and this is what's fascinating. If you look at the beginning of the month, do you remember President Trump speaking in front of the joint session of Congress? The market went 300 points up that night, right? Next day, basically. Here you are. He talks, the market roars. We fell back, retraced practically all of that, and the market's trying to get its footing now. That's what I'm seeing. When I take a look at the chart action right now, you still have a period of higher lows on the swing line and higher highs. Therefore, the trend remains to the upside until you take out the low right back here. You can't go by this yet because you're having an inside night. You haven't taken out the highs or lows of Thursday so far. As we take a look at the market slipping back to the 18-day moving average of closes, I call it MAC, this is a line that I call a reset. It's the line in the sand. I give it many names because it's such an important moving average. But when a market's trending, it often comes back to that number like it did here, like it fights battles here, to figure out what to do next. Moving averages, if you find the right ones or ones that you believe in, work what you think the way they should, they give you a big insight into the market. When I have my charting course out in your hands, you're going to learn that what it does is it acts as, number one, a filter on swing lines, gives you an idea if you're in a correction where the market might go, gives you an idea of support resistance points, be it if the market's coming down or up. It's really important. And then I use other moving averages. You don't see them all on these charts. They're in the course. And in the morning, all of my subscribers, because people that buy the course become a subscriber right away, what takes place is they start to learn with them. So what's happened is we've gone from the upper Bollinger Band back to the 18-day average. And in the process, the market is narrowing in one more time these Bollinger Bands. So this thrust of the market is over. Now the market's looking to see what's it going to do next. And when that happens, Bollinger Bands often pull in. You'll notice that over and over. Now, if you're an advocate like I am of momentum leading price, in this case, we're seeing momentum coming down, and price came with it. At the same time, these numbers are no longer overbought. They ran into the 18-day average, and now the market's settling in. Tomorrow's the all-important jobs data. Next Wednesday, we have the FOMC meeting. The market's fully expecting the Fed to raise rates a quarter point and for the dot plot to show further rates coming, maybe a 50% chance of a June, whatever it is. A lot of this is in the market. So now the question is, what next for the marketplace? And that's what the chart action is trying to set up. When you go to the March S&P, notice how this action, you fell back. This low actually took out that one. So this arrow here should be pointing down. I just screwed up and didn't do that. You're void of a trend on the swing line, and you're stuck at the 18-day average in a market like the Dow, where the momentum's still pointing down and it's trying to find its footing. What else do you see common? You're narrowing in these Bollinger Bands again. What you look for is when they can get themselves real narrow, because when they pop out of that, that's the play you're trying to catch. And what this market signaled, as far as I'm concerned, is that play's over. It's waiting for the next play. In the Nasdaq, it's the same thing. The Nasdaq, it's different though, is the swing line's been down, but because prices are over the 18-day average, the two fight each other. You've got bias up, the trend down, you're going nowhere, and you're still in the corrective stage. Haven't left it yet of getting out of an overbought condition because you're over a 73 reading. In a moment, I'm going to talk about my charting course and why I want you to take it and the discount I'm offering. Folks, we're talking $75. So you'll lose more than that on a tick in trading, and I think we can get you some real technique, at least some disciplined techniques. Let's look at the Russell. Higher high, lower low. First thing my eye says, no trend. Market's been under the 18-day average, downside bias. What else? You're now getting oversold. So one of two things happens. You've now under the lower Bollinger Band. Let's see if we were yesterday. This is Tuesday. This is yesterday. You were under the lower Bollinger Band, and again today. So now 5% of the time you stay under a lower Bollinger Band. Markets often, not all the time, often can go to 5. I've seen 7, but that also means I use each day as a percentage point when it's under it and say there's a 3% chance of this market staying under it. Is there any reason to be a buyer? No. But there's certainly, I can't find reasons to be a seller. If we had an embedded reading, I would change my opinion. I would never sell under a lower Bollinger Band. It's a trade recommendation or something that I teach you. However, I would tell you that, no, you just want to get more bearish. That's not the case here. This market is oversold and void of a trend, but it has downside bias. The VIX is the flip-flop. It's got higher lows, higher highs, 2 layers of resistance waiting for it, the Bollinger Band and the 100-day average of closes, but it's been stuck right here for the longest period of time. And if you go back on each day, how often do you keep hitting that 18-day average? You're not going anywhere. As I said, I am not sure just yet when this VIX is going to come alive and tell us that here, I'm back and here's the volatility the way it is. The market seems to be void of that volatility. 30-year bonds, the market's building in the Fed hike. Oversold condition, riding what? Under the 18-day average, lower highs, lower lows, getting now under, maybe a bit too much under in consecutive days, the lower Bollinger Band. That's all that I could say. Certainly a downtrend. Same thing's in place in the 10-year note. If we come back to today's action at the close of business Thursday, you don't have both numbers under 20. You do tonight, but it's only the first day. You're just oversold. And you're riding the lower Bollinger Band in a market that's in a downtrend. In the dollar index, look at how the market had an outside day down today in the dollar index, and this market has refused to embed. Whenever I see that, as bullish as the press wants to talk, the dollar, I got to tell you, the press, their job is to get you interested in something. My job is to say, market seems to have run into a lot of resistance, and while the trend is up, it's overbought, it's against key numbers, I don't know. In the euro currency, you had an outside day up today, and again, look at how you're bringing in these Bollinger Bands. Narrow, momentum, slowly climbing, but more neutral. Is the market over the 18-day average? No, it did close there last night. It's backing off right now. These markets are all pretty darn waiting to see what happens tomorrow when the jobs data comes out. Now, this is the case where I told you can be very bearish when you get an embedded reading riding the lower Bollinger Band. And you've even had bearish crossovers where the 18-day average got under the 100. So what I think the pros will do in this market is on good rallies, they're going to try to sell it. Now, I'll cover those rallies in my morning videos for my subscribers, and I show them how to try to catch those plays. Doesn't mean I'm right, but it's how you try to catch those. But selling against the Bollinger Band is certainly not one way. We then get to the yen. Now, what the yen is doing is it's not offering the typical safe haven status that when traders step in and buy it against the other currencies. It could be that the market is just saying, it's that the traders that are trading it are really saying, you know something, we're content. We know the Fed's going to raise rates. There's no reason to buy this in front of that. A little different thought pattern. Could it break out and start pushing the bands lower and really get into a downtrend? The answer is yes. Has it done it? The answer is no. It's just oversold, lying on the lower Bollinger Band, a rough market to get short right there. Now, we finally did get the action. This was Wednesday. You closed at 50.28 and you get under 50. If the market's going to probe the downside, one of the things as a pro I can tell you is if you got trade on the run, and how do you know you got the trade on the run? For 3 weeks almost, the press has told you that the CFTC keeps saying that the open interest is at a record and record bets on oil. Now you got the market under this, and these guys are caught up here if they're that bullish, you know, and according to the CFTC data showing who's long, who's short, big trader, small trader, hedger, blah, blah, they're caught. Even number, what's it going to do? If you break through it, can you get them on the run? Bingo. It breaks through it, and that may be it. You're oversold. You're 3 days under the lower Bollinger Band. These guys got a lot of resistance now against them, everybody that bought up there, and the fundamentals seem to be working against them right now. In the gasoline, not the same game. You didn't have that type of open interest buying gasoline for anything. But you've had a bearish crossover where the 18-day average got under the 100. The market's run down. And if you're selling under a Bollinger Band, God bless you. I wish you the best. You'll never do it if you take my charting course, and we'll talk about that. Then we get to the nat gas. And remember, I've pointed out to you that back here, what you had was a gap from this day, right there, that's Friday. On Monday, you gap higher, and you have a difference between here and here that hadn't been filled. Market slips down, fills it, closes back over. What's the swing line? Higher lows, higher highs. If the market wants to punch, you've got two areas that you might be going to. Here's today's action, and here's tonight. So you can see how that trade's working out. But I'd be scared. You're very overbought now. If you can't get up there very quickly, you've come from these lows, 263, you're up quite a bit. Be a little worried. You know, I keep talking about my charting course, and there's a reason for it. I believe that I can teach you what I do in a very short order. There's 5 different parts you're going to learn. Remember the slow stochastics, the momentum? Momentum leads price. What about Bollinger Bands? The odds of staying over or under? How do you work with that? Then we're going to talk to something you never see here, window envelopes, which are another profit-taking. They're just a profit-taking tool. They're never a stop-out tool or anything like that. You get with my course, and by the way, my course used to be $179.95, and I'd laugh at people selling courses for literally thousands of dollars. If you're one of those, ask yourself what you got. My course is now $89.95, and that's because I redid the whole thing and could use today's technology. I don't have to send you a CD. I don't have to have the cost of making one. I do it all online, and I'm going to give you a $15 discount. Use the code IRA15. If you go to our website, you'll be able to see at that time. Go to education. I've got a small video there along with a fact sheet. So if you have questions, the most common questions, how it all works, what you get. You get the charting software that I use, especially if you haven't ever tried our charting software. I think you're going to love it. What's the second step that you're going to get with what we do? You're going to get my daily research. It's normally a $60 value too. I'm throwing that in. Between the charting software and my research, it's $160, and then 54 chapters here for you to review on what we're doing. I give you the numbers on window envelopes to work so you can plot them. I write commentary. I said, buy here, sell there. I back it up in the morning with a video that looks like this so you see why we're doing or why you're doing what you're doing and why I'm saying to do that. Call, go to our website. If you're watching me on YouTube, you can click right up here. Immediately you'll be taken to the area to purchase the course, or you'll see questions you can ask about it. All the facts are there. Can't make it any easier. If you go underneath us and you see us on a different website and you click, it'll be our typical forms. But go to that www.iraepstein.com, take it, and if you have any questions, just call, ask for me. I'm generally around the office. By the way, that brings up the last part. I have to do all these videos very early in the morning tomorrow because I have to be out of the office at noon. So I won't be in the office from noon on tomorrow afternoon. I'll be back Sunday for sure. So what will happen right now is that'll be earlier videos, the weekly videos. So I'll give you an idea as best I can on all that. Take advantage of the course. I think you'll love what you see. I'm Ira Epstein.